What's going on, guys? It's Jazz again, and today we're going to be doing backtesting again. This is from the previous day. We did part one. Today's going to be part two. So we're going to do three more trades. Over here, it looks like Monday, September 9th, we continue. So September 9th is right around here. So now it's Tuesday. Wow, I put Monday, September 9th. That's crazy. So Tuesday, September 9th, 9:30 Eastern Time. This is going to be market open. So we're going to go ahead and fast forward to that day. Bam. Looks like we're here. Alright, so first things first, we need to mark out our key levels. This looks interesting to me. This looks interesting to me. This was interesting to me, and it looks like we actually swept the downside before market even opened, so we already have our level 1 confluence. So this would be our take profit if we're going to take longs today. We could also aim for up here if we wanted to, but that's optional. I think I'm just going to aim for this. Unless price decides to break structure all the way up until here, and it leaves me a horrible risk to reward. Alright, so now that we have our level 1 confluence, we're going to look for level 2, which is a break of structure to the upside. And we don't get that yet. Alright, so right around here, we break structure to the upside. So if I can draw right here, this top wick right here, this candle closed above this previous high. So now from here, we're looking for a retracement, which will be our level 3. Get rid of this. So after we get that break structure, we're looking for a retracement. Right now, I don't see any gaps or anything, so we actually started going to the downside. I would look for equilibrium. Just bottom with the top wick, and it looks like we are in a discount. So the farther we go into this equilibrium box, the better of an entry we'll get. So let's say I wait for right around here. Alright, just because my risk to reward is 10 points, price is going to have to move very volatile in order to make me get knocked out or lose this trade. So 17 points, not bad for this trade. Let's see what happens. Alright, so we get insanely stopped out. We got killed right here, so that's a loss. We'll take that. It's fine. Minus 250. So now 781 minus 250. 250. We're sitting at 531 again. So 531 is our initial balance. Let's go back. Go to the next day. Remember, guys, always take your losses. Don't overtrade. Don't revenge trade or anything like that. If you lost for the day, you lost for the day. Just go to the next day and see if you'll make it back. Alright, so 9:30. Boom. Let's keep going. Let's keep going. Alright, so we can stop around here. Alright, so looks like we are going up. It's an obvious uptrend. We may possibly keep going up, or we could go down. But I'm going to mark up here since it moves so high. I mean, I would count this as a sweep. I usually do, but not today. No, I'm just kidding. No, I'm just going to use this as a point so that way it has more room to see which side it's going to go to. So these are going to be my key levels. I think if it sweeps the top, we can go to the downside. So we'll see what happens after market opens. Alright. It's taking way too long to do its move. So it never swept anything. So this is the thing about having a wide open like key level spot, because my key level was all the way up here and there's a key level all the way up here. Obviously, like I said, I usually count this as a sweep, like a pre-market sweep, and then I wait for it to break structure, but then it can do anything after that. And I usually don't like trading pre-market session, so today would be just a non-trading day for me. So let's go to the next day. 9:30 a.m. Alright. Here we go. Now we are here. Another long wick. Jesus Christ. Alright. Hate days like this. Okay, so look for here. To be honest, this would be a key level, and it looks like it got pre-market swept. So knowing me, I guess we can try to look for a trade on this one. So since we swept already, we'll look for a break structure to the upside. There's no previous days to go to. I mean, we have this long wick here. Our risk to reward is probably going to be terrible. Market opens. So this is what happened for me, right? So we get our break of structure right around here, exactly on market open. We close bullish above this last green candle, and then we have no clean fair value gaps. I mean, there's some down here, and it never got tapped into. So I'll just use my best friend, equilibrium, from top wick to bottom wick. Since we're making it down, or we're going down, and then from here, we can see that price went down a little bit into here. I usually take my longs right around the middle, this equilibrium, 10-point stop loss. Price gonna have to move very bad, and then 10.75. So this is nearly a 1-to-1, and we won as soon as price went into that equilibrium range. So that's a 10. That's 10 points. So 25. That's 250. So we won 250 that day. So this would be 781. Back to 781. Alright, cool. So we need one more trade. Let's go to the next day. Oh, on the 5-minute. C7, 9:30. Boom. Alright, skip forward to this day. Come on, hurry up. Alright, so price is moving all right for this one. So our key points would be right around here. I got one right around here. There's more around here. There's some fair value gaps down here. So I'm hoping that price sweeps the upside and then goes to the downside. This would be a very juicy win if so. So let's see what happens. Market opens. Perfect. We'll get that sweep. We sweep this key level right here. So now we wait for a break of structure downside. It actually happened right around here. There was no fair value gap. We can use equilibrium since price is going up. Right around here, the farther in this box, like I say every time. Take a short somewhere around here. Stop loss 10 points. We can target down here. And since I said that it was a juicy one because there's one down here, if we can reach this one here, I can move my stop to break even. So that way, if it goes back up, I lose and it could just break even. And I can move it all the way down here, and this would be a 40-point win. So let's just see what happens in the first place. It might go up and stop us out, but who cares? Let me just let it play out. Alright, so for in this trade, we actually took a loss, so that's fine. Yep, there we go. Okay, so 250. Bam. And we're still in profit. So there's nothing to be worried about. We're still in profit. We could just make it back the next day or so. Let's see how much time I got left. 8 minutes. We'll do another one. Why not? So 15-minute time frame. 9:30. Right around here. Let price go into the zone right before market opens. Alright, we are going up. So this would be that liquidity sweep for me. Price has touched both of these key levels, so I'd immediately be going to the 5-minute time frame. Where's it at? Boom. So we'll wait for a break of structure to downside as soon as market opens, which actually never ends up happening. I'm kidding. Alright, so it happens around 11:20, which is around my peak. But if we can get some form of retracement, because usually at level 2 I'll look at the market a little bit longer, and this thing is just trash. Alright, so this is around 12:55. This is way too far. But honestly, I got that level 2 confluence. All I was looking for was a retracement, so it will definitely be worth it to do that. We did leave a fair value gap right around here. Actually, you know what? To make this even better, if the market is taking too long, I also do this. If it's taking too long for a retracement on the 5-minute, you can always go back to the 1-minute for a sniper entry. So as you can see, we broke structure right around here. This is where we broke structure to the downside. We can also go to the 1-minute and find ourselves a retracement, which was actually perfect. So I should have been in the 1-minute from here, but we had this big fair value gap. It got tapped into. And then I would get on as soon as it closes out of this zone. because you don't want to enter as soon as it touches that zone. You never know if it's going to push right through. So it closed out, leaving a big long wick to the upside, meaning there's strong selling power here. So stop loss is going to be 10 points. We can target the downside. So this might be a long way down. Oh, it's actually just 17 points. So it's not too bad. There's also some more down here, so there's multiple take profits for this trade. Let's just see what price does. Alright. So we barely wick. Does that even touch her? What the hell is this? Oh, this is our previous zone. Alright, so I made a mistake here. I actually left this as a it's not a zone for take profits. So while you're actually when you take your trade, you want to mark your take profit. All this liquidity down here can be your take profit zones. You want to target the opposite direction. Everything that looks appealing to you. Alright, so now we're better now. So in this instance, our first take profit was hit. So I would move my stop to break even. So then we just break even. We don't make anything on this trade. So we're still at 531. So after all these days, I'm sitting at 531 in profit. So this is about a week of trading. 531 for the week. So not bad. This is just trading with 5 micros. I hope this helps you guys out. But yeah, that's pretty much my strategy and just me back testing it. I know there's probably a lot of flaws, but during the live market, it's a lot more scarier because the volume spikes fast and such, and you don't know when to enter. But as I said over here, when you go into the 1 minute or so, you want to wait for price to enter your fair value gap. Like let's say this was a fair value gap. Price will go into the gap, and then you want to wait for it to close out of that gap. You don't want to enter exactly on the gap because price can actually blow through the gap. But anyways, other than that, I'll go to the next day and I'll show you some more back testing.